Hey traders, John Howell here. Today, you're going to be looking at the markets. Isn't the tech sector markets. I'm just looking at all the tech sector stocks. And man, they are getting absolute hammered. Are we actually about to form a top in the markets? Is this the top in the markets? What do I believe? You know what? Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. Now, I started off obviously this video with the tech sector. So let's actually bring on the good old Nasdaq chart. And the Nasdaq chart, you know what? Let me bring on a candlestick chart just so I can make it more like good for you guys. I like to use the bar charts. And if you guys... let me bring up this chart right here. I like to use charts like this. This here is what I like to use. The first reason why I like to use this chart is because, you know, it allows me to read the charts properly, you know, and one of the most important things, or one of the important things to a trader is reading the market properly, right? Which is the swings. A lot of traders use just, they use candlestick charts and the red and green. Like trading is an emotional thing, right? So we need to do whatever we can to remove the emotion to make really good decisions. And I've always found just by looking at the bars, it doesn't bring much emotion to me. You know what I mean? Like as much emotion as in like a red and green candlestick. So that's the reason why I use the black bars in here. So we can see that what the Nasdaq's doing right now, traders. Look at this here. This is actually not looking good at all. Let me show you. So the Nasdaq had a double bottom, then we had a double top. We raised up, made a higher high. Now we made a lower low, and now we're making some sort of lower high. This is actually getting quite ugly. So we could actually start to see on the Nasdaq chart, we could start to see something come back down through to there. So if I bring up my longer term charts, there is major support level around that 14,000 level, somewhere around about there. Now we could actually start to see this market actually pull back quite hard through there. We can see, look at this. This is the hourly chart, and what we're seeing through here is you can see how, and the market does this, right? The market, like, it's just watching and waiting and watching and waiting, and then the market does this. So we can see it actually ripped a lower low, and then it ripped a lower high, and now we're rolling over. So there's a massive probability, and especially now we have broken past like this short-term charts. That's that key level there. You can see how it actually held right here. This 1 hour. This is the last hour of trading today. So you can see it actually held here, held there, and held right at that level, and then last level broke. So on the Nasdaq is not looking too good for the upside. This is actually, we're probably going to continue seeing more pain in the Nasdaq, and the tech sector is getting hit pretty hard. You know, if I just look at like a lot of the tech sector stocks, the biggest one out of all of them that I'm seeing, the two that I'm seeing right now is Tesla. So let me bring up the good old Tesla. So the Tesla is actually getting quite spanked today. You can see, and this is where traders, if you were trading based on purely fundamentals, this is where trading based purely on fundamentals. Now this is trading, not investing, okay? Investing is a different form of approach to the markets, okay? You've got two different approaches here. Please don't mix them up. If you're an investor, you buy and hold, and you've got to, even if the market does dip for 10%, like you don't really care, right? Because you're like, okay, I'm buying this thing and I'm holding it for a couple of years. A trader is, okay, you're trading more for an income approach. But anyway, so this is where you trade in the market based on a fundamental news. It's not the right way to go, because look at this here. On this day right here, Tesla came out with a really, really, really good earnings, shattered all expectations and all that sort of stuff, right? But then, and then suddenly you buy it because like, oh my goodness, really good earnings. The market's going to go up, and then the market drops. You're like, shit, I'm down now almost 20%. You know what I mean? So that's why I personally never trade based on fundamentals, because if I'm trading, the only thing that I can rely on is the chart. And a lot of people think that, oh, John, you need to have the fundamental to be successful at the market. And that is completely wrong. You don't need the fundamental. to be to do really well for the markets. You just need, say it with me, starts with S and ends with istem, right? You just need a system. And that system, guess what? Has a win-loss ratio. I think the biggest problem is that most people go to these markets and they think if they have a losing trade, then that's the wrong thing. Let me ask you a question. What is the right thing to do in the markets? Taking a trade willy-nilly? Or actually, no, let me rephrase the question again. What is a good trade in the markets? What's a good trade? A, taking a trade just off the willy-nilly and making money? Or B, taking a trade based off a successful system and actually losing money? Which one is a good trade? See, your brain says, oh, well, I made money, so therefore it was a good trade. But systems are that. Probabilities are that, right? And you have systems out there that 60, 70, there's no 100% success rate. But I guarantee you, okay, let's actually go back to there. So A is, I just took a trade based off a thought and I made money. And then B, I took a trade based off a system and I lost money. Which one is likely to net you at the end of the year a really good positive return? Is it the A approach, just a thought, where, oh, I'm just going to thought my way to this? Or B, sticking to a system? Well, obviously B, right? So that's where a lot of traders go wrong when it comes to these markets, is like they think, oh, well, if I make money, that was a good trade. It's actually, you've got to switch it around because that's what a lot of traders do. They have a few losing trades and like, oh, this doesn't work, so on and so forth. So anyway, look over the S&P 500 and we can see the S&P 500. I did a video a couple of days ago and I said, this is a do or die area. And I tell you what, it's not looking too good right now, right? Not looking too good. I think we're about to die. We had a little pop pick to the upside. Is this like a little bit of a head and shoulder formation as well? Like, yeah, shoulder, head, and the shoulder formation through there. Is that a little head and shoulder formation on the good old Nasdaq chart? The S&P 500. So we could see more downside. But the overall, or if we look at this hourly chart, look at this here. That was that do or die line. And look what happened here. Double top. And it ran up, hit it once, and then tried again, and then just fell off a cliff, right? That's like us men. We hit the brick wall. It's like, okay, then let me try again. And then we hit the brick wall again. It's like, ow, that hurt you, bitch. And then we back off a bit. Go over. And then we have, and then we have, that's supposed to be a hamburger, by the way. And then we have a hamburger. So that's what's happening on the S&P 500 traders. It's actually quite, if we just look at what's happening here, we are starting to fail a little bit through here. And if I look at this weekly chart, is just we're starting to flatten out a little bit through here. So how much have we actually done so far on our pullback from the low to high? Oh, that's 4%. So where would 10% be? Whoa! Oh! How about those three apples? That's a 10%. We get that in the markets, guys. I tell you what. One, that's going to be the greatest offer. That's going to be a layup. You know, Michael Jordan comes back to town. And second, it's going to be a layup because then that's probably going to be a big slingshot move in the markets. And that's what I'm actually hoping to see that. Give me the bloodbath. Give me the blood, right? I want to see the blood. And let me actually share with you one indicator that I'm seeing, right? I want to see that's going to tell me whether it's going to be when we're likely to form a bit of a bottom or not. And that's this one right here. It's a good old fear and greed index. Right now, we're just neutral. There's no fear in the market at all. So if I go back down to the bottom here, all right, down to the bottom, okay, a bit of fear. Look where we are right now, all right? We're not really greed, we're not really fear, we're just meh, right, meh. But as you can see, right, look at this here. Every time we got down the bottom here, and I did a video based on this one saying we should expect from it. I want to see this thing, if we get a 10% sell-off, this thing's probably going to get smacked down the bottom here. And that to me is probably where we're probably going to find massive extreme fear. And then we get the slingshot move. If we can get that again with a 10% correction in the markets, that is going to freak the people out. And the people are going to be like, oh my goodness, I can't believe this is happening. The world over, it's going to crash. Oh my goodness. And then guess what? And then it's a buying opportunity. And then 6 months later, the market's ramming up like that. And we just finished the year off. Remember guys, traders, we're just in January right now. So for the rest of January, we could continue to see a sell-off. And then by December this year, the market's up 30%. That is possible. So this is the one indicator that I'm looking for by looking at the markets, and we can see that that's what's happening with the S&P 500. So traders, the stock market, or the market of stocks, is not looking too good, especially that tech sector. And the tech sector, to me, looks like we're about to get a lot more of a waterwork, a lot more of a downside to come. So traders, when I first started trading, I lost $250,000 trading the markets. And then I got access to a few seven-figure mentors that really set me straight on what I need to do with the foundations, how to read the charts, the trading systems, the mindset, so on and so forth. And then that was the massive turning point for me to be doing really well from actual trading and being successful trading. So what I've done is I've created a course called the Breakthrough Course. And what I've done is I've actually put a whole bunch of really good education and strategies and processes that help me go from $250,000 in debt to then actually becoming a full-time trader, making a full-time income from trading. And I'm actually running a flash sale to that trading course. So if you go to johnsflashsale.com, or there should be a link in the description. If there's not, then go to johnsflashsale.com. That's JOHNS flashsale.com. Go to johnsflashsale.com and you'll be able to get access to this course now for $7. So go get access to that right now, guys, and I'll see you real soon.